Well, joining us now, we talk a lot about the markets and what's going on with grain and livestock prices. We got to talk about land prices, about that ground that is under our feet that we plant our crops into. Joining us now, Senior Vice President of Real Estate Operations for Farmers National Company, Paul Shadegg is with us. And Paul, great to have you on the show with us here today. Thanks so much for joining us. How are you?
I'm doing well. Thank you for having me, Jesse.
Well, let's talk about a brand new report that FNC you guys just released and looking at the real estate market and looking at land values and walk us through the big takeaway. It sounds like maybe a bit of a slowdown. Can you explain that for us, Paul?
Yeah, we're definitely entering a different era in the recent land market. You know, we went through some pretty extremely strong and active years in 2021 and 22. And what we started to see in the third quarter of, or after the third quarter of 2022 is somewhat of a slowdown. It didn't appear that way because things were still really active in the fall. But when the Kansas City Fed land survey came out, it reflected across the Midwest that there was certainly a slowdown in both volume of sales and value of that land being sold. So how I've identified that is just that I think we've entered a period of de-escalation. So it's no longer double-digit increases; it's more like single-digit increases across most of those states.
So it kind of seems to me like the out there people are out there. They want the quality farmland, but maybe not necessarily wanting to pay top dollar for it. Is that kind of how you would describe that, Paul?
Yeah, to a certain extent, you know, that when we talk about those really good, what we call Class A farms, there's still a very strong demand for those, and the competition for that is still pretty fierce. But whenever you step away from those Class A farms into B, C, and D, anything that has any little glitch to it, drainage, erosion, weed issues, things like that, those are being discounted a little bit. And even though, you know, we're talking about a de-escalation or a slowdown, the growth is still there. We're still into a positive growth. It's just nowhere near what it was the last 2 years.
Sure. Well, I know for farmers and ranchers here the last couple of years, commodity markets obviously have been very high, and farmers have had an opportunity to make some sales and really have some good amounts of money in the bank in many cases if they managed it right. And I'd have to think that has helped with some farmland purchases or could potentially help here in the future, Paul.
Yeah, it's a great point, Jesse. And what how I would identify that is farm operators have, over the past 5 years, have enjoyed a real great period of high liquidity, which gave them cash to make land purchases, make capital purchases, equipment, and such. And what we've seen now today with a combination of inflation and some increased lending is that has definitely narrowed. There's not quite as much liquidity, not quite as much cash in their pockets to make some of those purchases. So when we look at things like that, that's going to also back up our thought of the slowdown in the market. And I think we're bound to see some of that. Definitely not going to fall off a cliff, but we're definitely going to see somewhat of a plateau.
Now, I know in the case of, say, the housing market in many areas, we don't have a lot of houses available for folks right now. Is that the case with the land market? Is there not as much land available right now, or is that different than the retail housing market right now, Paul?
Yeah, the supply is absolutely tight in the land market, and that's caused by a couple different factors. I look at it as what opportunities are out there right now, and we have landowners that have that's been a long-term investment. It's been in their family for many, many years, and they've held on to it because they've seen it as an appreciating asset. And there are some landowners that are looking at the opportunity to sell at record high markets. Or there are others that say, you know, I don't need to sell this land. I don't owe any money on it or owe very little. and I think I'll hold on to it and keep it as a very valuable asset as part of my portfolio. And then some of those farm operators, they're not in financial stress, so they don't have to sell anything either. And so that's really created a tight supply, and
Mhm.
that also increases the competition because we don't have as much. Still have quite a few buyers out there, but there's not much land for sale.
Paul, how about regional differences? I know, I think about when I see like the recent years, the massive price tags on land sales in Iowa, for instance, versus maybe a land sale in North Dakota. I mean, what are some of the regional differences, if any, that you guys have seen in this new report, Paul?
So when we look at Iowa, Illinois, Indiana, Eastern Nebraska, places like that, that has definitely been the hotbed for these really strong sales, and that's where most of the competition lies. Most of the those farmers have had some really good years and are able to produce some great crops. Now, with that being said, when we look at it from the 10,000-foot view, land values across the country have all escalated over the past several years. We can even go back farther than five, and we've watched that trend move up. But now we're seeing some regional differences in the drought areas because 1 year of drought didn't affect the values very much, but 2 years of drought out west, that has really put pressure on those guys because they didn't have a crop, and they're going through those struggles. So those regional differences absolutely exist. But when we look at everything across the country, we're seeing some great appreciation in land values across the board.
I should ask this as well. I just thought about this. I know some of our urban areas we continue to see that expansion outward, and we lose some prime farm ground. Are most of the buyers right now, are they farm operators? Are they folks in business and looking to develop maybe new housing developments on farmland, et cetera? I mean, what's kind of the balance there, Paul?
Yeah, when we analyze who are our buyers, what we're seeing, the trend that has not changed. Some of the dynamics of the trend have changed, but 70% of the actual buyers, the successful buyers of farmland, are still the farm operators. And with that being said, the investors and people, the developers, they are definitely part of the equation. They attend those auctions or they're involved in some of those sales, pushing those values up to a level where they're comfortable. And when they reach a point that exceeds what their ROI number is, then they're going to step away. And that's when the operator is the successful buyer. So they're definitely part of the equation. Sometimes they're just not the successful buyer.
Fantastic thoughts. Lots of ebbs and flows for sure. Paul, I know this new report, if folks want to read it, look at it a little more in depth, you guys just released it here this week. Where could folks find this latest report, Paul?
Yeah, it'll be tagged on our website at farmersnational.com.
That's a great spot to go find it, farmersnational.com. Paul, before we let you go, anything else we haven't touched on with the new report or anything else you want to reiterate for folks as they're thinking about this?
Yeah, we always get asked, what do you see coming down the road? And when we look ahead into 2023, we anticipate that we're just going to continue to see strong competition for that high quality land. But I do remain confident that that land that'll continue through the end of the year. And when we couple that opinion with the stable ag economy and our supply demand scenario, it definitely favors the landowner. And we think that current and long-term value of farmland will be sustained.
Fantastic thoughts. We appreciate the time. Paul Shadegg, Farmers National Company. Thanks so much for joining us, and we'll look forward to talking to you again soon. Thanks so much.
Yep. Thank you, Jesse. Take care.